All right, you guys. What is going on? My name is Blaise, and we're here at the Blue Chip Athletic Club podcast. Welcome on Stephen Cole, the man behind the Bitcoin, if you will, all things finance, Bitcoin, you name it. We're going to talk about it today. Real quick before we get into it, shout out to our partners, First Form. The greens that we take every day, we'll send you guys a sample of those straight to your door if you're interested in trying them out. We put them in coffee. It is the best way to take coffee. It's like having a chocolate milk. Sweet Perfections protein cookies, and then the guys over at Pilot Base Log 10 Dash Track, and then the guys at the Built Different Mastermind team. All of those guys are going to be in the show notes if you guys are interested in learning a little bit more about them. With my business coaches, which is how I actually got to connect with the man, the myth, Stephen Cole himself. So real quick, man, just do me a favor. There's a lot of people here that don't know who you are, where you're from. Go ahead and give us just like an origin story as far back as you kind of want to go, and then we'll kind of piece together what you're up to now.
Yeah, thanks for having me, Blaise. I'm excited to chat. Shout out to Jeremy, our good friend who introed us and made this happen. So my background, I'm from the Midwest originally, grew up in a small town, was really obsessed with internet tech just through my teenage years, knew I wanted to do something in technology. As soon as I finished college in the Midwest, I moved to Silicon Valley. eBay was my first job out of college, so I was an engineer there for a few years. I started to move into leadership and management roles at eBay and learned a little bit about how corporate life works. And then I got really enchanted with the idea of a tech startup and just what that meant, and the idea of a small group of people who have some shared belief in a mission, and they're just throwing their everything at it. Seemed awesome to me. And a leader I really admired and still do left eBay to start a cloud computing company. And so I joined, and I was an early employee. And I had a couple of startup rides in my 10 years in Silicon Valley. So I was part of a cloud computing startup in 2012 called Cloud Scaling, and it was acquired a few years later by a larger enterprise. And then I worked for an AI company back in 2015 called Nirvana. And Nirvana was acquired by Intel a couple of years after I joined. So 2 times I kind of experienced that ride from scrappy early stage startup company to like corporate behemoth and everything that roller coaster entails.
Yeah.
Yeah. And then outside of my primary duties at work, I started to get really interested in Bitcoin in 2013. I was already kind of primed to appreciate certain aspects of Bitcoin. I was really into libertarianism at the time, and I was reading these economics books about what makes good money and why humans have used various forms of money that we have in certain places over history. And even the idea of the separation of money and state, kind of like the idea of the separation of church and state, and just like whether that's a good thing for the world was something that I kind of wrestled with and was interested in. And all of that was intellectually interesting to me, but I always thought, there's no way that any of this stuff is ever going to happen in the real world, because they're never going to let us like vote to change some of these things, and there's very powerful organizations that would be threatened by some of this stuff. And when I encountered Bitcoin, the more I learned about it, the more I began to believe, wow, this could actually be a tool that lets us achieve some of that stuff that I had already believed would be good for humanity. And so I just became super interested in it, started learning about it in all my spare time, began doing community building. So I started meetups for Bitcoin education in a couple major metros, the Los Angeles area, the Phoenix, Arizona area, just to bring people together and learn about this stuff together. And then after I left Intel, I started doing venture capital and angel investing into early stage startup companies, because I just felt like I had learned quite a bit as an employee of startups, and I wanted to try to apply some of those learnings from the investor side of the table. And then all of that has now led me to my current focus, which is co-founder and CEO of a company called Castle. And Castle's focused on bringing Bitcoin to businesses in the US.
Super cool, man. So you went the arc of going to eBay and then being part of top tier. Like they've been around a long time, and people still shop on eBay, which is crazy. And then you talk about like, going through the character arc of then being a part of startups, seeing the scrappiness, then getting bought out by corporate America. And now you're the one that's trying to empower the people that are looking to do those things and then be part of a startup too, again, which is cool. It's like you are interested in driving the young entrepreneur that's looking to grind and get something out of the world and kind of pour their heart and soul into it, which is really, really cool, man. I resonate with that a lot. Just wanting to be somebody who does something kind of unique and wanting to do that too, which is awesome. And funny story, you talk about Bitcoin in 2013. I think the first time that I heard about Bitcoin, I was a freshman in college, which was in 2013. And ironically enough, I'm sitting in a macroeconomics class and the instructor starts talking to us about Bitcoin. And I'm like, what is this nonsense? And he's like, yeah, you got to get in on it. It's like $200. And to me at the time, $200 felt like an absurd amount of money to spend on this thing that was like, I definitely didn't understand. I still don't know if I fully understand it, to be honest with you. And I was just like, man, I'm sitting here and I'm like, dude, this $200, there's no way. And he's talking to me about mining and artificial money and all these things. And I'm like, dude, what is happening? And now, he's probably sitting there laughing on a throne of cash, probably like, yeah, these idiots. I told him, I gave them the key and they just never took it because they were too busy buying beer underage and trying to find ways to do those things, which, kind of funny. But yeah, I'm super interested to hear. So tell me a little bit more. Like, let's say I'm somebody who knows nothing about Bitcoin. Give me the quick and dirty. Be like, hey, for your average Joe who's heard about these things, heard about some of the cryptocurrencies, tell us a little bit about, pros and cons of Bitcoin, why you feel that it's like a great form of cryptocurrency, because I've heard you talk about that in the past as well. And I think you do a great job breaking it down. So hit us with the why Bitcoin and why that instead of Doge or whatever else is kind of like hitting the market or kind of like pumped up in the media.
Yeah, one of my favorite things to jam on. I would say big picture, Bitcoin is the best form of money that we've ever had. And the big breakthrough, what makes
bold statement
yeah, right out the gate. And to kind of back into why I believe that's true, what makes Bitcoin special in my view, the big breakthrough that came with it, is that when it was created, which was 2009, it was the first time that we figured out how to have a limited number of something digital, of something that's on computers. And I think that takes a while for people to grok. I know it did with me, even like having a technology background, doing software stuff all day. I thought, computers are great at copying information. And so if you have something on a computer, it's like cheap and free and easy to copy. And so the internet that we're used to for all of our lives has just been this internet of abundance, where if you've got a file on your computer or on your phone, like a music file or a video or a picture, and then you send it to me, it's not really that, there's this one thing and now like you sent it to me. And so now I have it and that means you don't have it anymore.
Yeah.
It's just computers making copies of stuff. That's how the whole internet has always worked. And so I think intuitively when people who are new to this think about computers, it's just like software stuff is kind of unlimited and it's very fuzzy in their minds. And I would say the big breakthrough way to think about Bitcoin is it's the first time that we kind of solved a computer science problem that allows us to have a guaranteed supply of something digital. So there is only a limited number of Bitcoin that can ever exist. That magic number is 21 million. And it's truly unchangeable. As wild as that sounds, I know that statement invites skepticism. I thought it was nonsense the first time that I heard it, but the more that I've tumbled down this rabbit hole, the more confident I've become that that is really true. And we're just not used to that. We're not used to stuff having these hard limits, because we get lied to about scarcity and about things being limited all the time in our day-to-day lives. Like it's always the last Rolling Stones tour, it's always the last Star Wars movie, it's always the last Jay-Z album. Like, name your thing.
How many times are Blink 182 going back on tour? You know what I'm saying? Yeah.
Yep, I saw them last year, and totally. And so the more that someone can convince us that something is limited and is like a collector's edition, never going to happen again, the more willing we are to pay attention to it, to spend on it, to kind of store our value in it. And they can always change the supply of all of these assets. Even when you think about things that you can invest in to hold your value, you could store your money in US dollars, you could store it in like bonds, you could store it in stocks, you could store it in real estate, gold, precious metals. Some of those things are harder to like find more of than others. Like it's pretty tough to go and dig gold out of the ground, for example. And it's pretty easy to just print a bunch of dollars out of thin air. But ultimately, we don't really know the supply of any of those things. They can always print more dollars. They can always issue more shares of stock. They can always build more multifamily real estate and even precious metals. The better we get with technology, with digging into the Earth's crust, eventually like up in asteroids, we have no idea what the supply of any of those things are. And Bitcoin is wild in comparison, because it is completely unprecedented. We know with perfect certainty not only how many Bitcoin there are right this second, but how many there will ever be, even 1,000 years from now, which is just the implications of that are crazy, and I think sometimes hard to digest and appreciate.
For sure.
And part of your question too is kind of how Bitcoin compares relative to other cryptocurrencies. So usually Bitcoin's the first one people hear about. It was the original, and there are tens of thousands of other cryptocurrencies now. Ethereum, Cardano, Ripple, name your coin. All of the others differ from Bitcoin in a way that I don't think is immediately obvious. So I would argue Bitcoin is the only one that's truly limited. Some of the others, if you like go and read the software and read the code, they do have limits in that code. Like in theory, there's a limited number of Ethereum tokens that will ever exist. There's a limited number of Ripple XRP tokens that will ever exist. But the detail that gets glossed over is that there's typically a small group of influential people who created that project. There's like a founder, a brilliant developer. In some cases, there's a CEO and there's like a corporation over the top of the thing. And if push came to shove, they could use their influence to change the rules of the system and to kind of convince the whole ecosystem to do what they say and to follow them. And as a concrete example of that, Ethereum was created, around like 2014 or 15. And over the last, 10 or 11 years it's existed, the supply rules around how many Ethereum tokens will ever exist have been changed 5 times. So every, 2.5 years or so, there's like all these smart sounding reasons why the developers say, we should actually tweak this and that, and maybe it should be different. And then the whole network just kind of follows them. And I think Bitcoin is very special in comparison because there's no leader. We don't even still to this day know who created it. That person managed to remain anonymous. And so it is immune to all of those kinds of social attacks, you could even say.
Pressures, right?
Pressures, yeah. And so when it comes to protecting your value and having guarantees that you will never be subject to inflation, Bitcoin is in a league of its own.
Yeah, it's crazy to think about. I think the reason that it's so wild, and I think the reason that a lot of people are sketched out about it is probably because of that too. They're like, oh man, this random person who I forget the guy's name, who they goes by the alias or whomever, or the board.
Satoshi Nakamoto.
Correct. Yeah. So Satoshi ends up making this thing, and they're like, we don't even know who this person is. You Google them, and it just says this person founded Bitcoin or group of people. And they're like, oh, if I can't attach like a name to a thing, it makes people more timid, I think, around it. But on the flip side of that, if you think about all the other coins, you make a great point. And even like the US dollar, and I heard you kind of go down a bit of a rabbit hole when you were on Jeremy's podcast talking about how like the Federal Reserve's like printing money and these other kinds of things that like end up, you know, kind of at the end of the day, kind of screwing the consumer almost in all cases. So
yeah,
interesting to see like, oh, hey, like this thing is different, but most of the time different makes people one skeptical, which for the most part it probably should. But then two, when we look back at like all these other coins that have this founding board and they have these other people that have, whether that's shares or votes or personal vested interests, then it starts to become like a little bit more muddy when, you know, I don't want to say like insider trading with like people in big politics and stuff, but things like that become more and more accessible to people that have the purse to be able to do so and then influence that thing. So it's interesting that you kind of lay out like, hey, this is why these guys are almost, or this coin is almost like above reproach in this way. We're not able to dial in this one founding member or founding board members to be like, oh, hey, we're going to pressure these people into doing it this way. It's like, nope, we're 21 million. We're capped out at that. And that's going to be how it is. So like, you know, thinking about this thing that's digital, which honestly, like money is all digital at this point anyway, right? Like most people don't carry cash anymore. Like there's a lot of places that you go probably to a restaurant and they're like, dude, this is like card only. And like most of the time that's how I feel like it is, at least out in Florida for sure.
Oh yeah.
And I'm starting to think like, is it that crazy to think that we could store value in this thing that's a coin? I mean, we've done it with artwork. We've done it with other things that we've just found a way to kind of conceptualize because we can feel it. But
Yeah.
it's interesting to see like, hey, that the world is making this digital shift, and maybe Bitcoin, maybe some of these other coins even too, become like part of the initial wave of that, you know?
For sure, for sure. There's a funny dynamic that I've noticed in my personal Bitcoin journey. And you talked about how initially some people could be hesitant or sketched out by like who created this thing, like where did it come from? How do we know we can trust it if the founder is anonymous? And you know, at first I kind of wrestled with that, and over time, that's one of a handful of examples where early on in my first encounter with Bitcoin, something seemed like a downside. And then the more that I learned about it, the more it became something I viewed as a strength. So all these things that almost seem like bugs, you could say at first, end up being features of
Yeah.
it. And it's true in so many different facets of the project, like in, you know, its lack of kind of a leader or a figurehead. There's a lot of people who think Bitcoin and Bitcoin mining is bad for the environment. And the deeper you go down that rabbit hole, you learn it's actually a fantastic thing for the environment. It's actually going to do a lot of good for the environment. But you know, it just gets so misconstrued in the mainstream media that it seems like something that's a bad thing initially.
Yeah. And what else is crazy too, and I had also read and heard about stories of people early on in the Bitcoin journey of like dudes who paid like 100 Bitcoin for a pizza, or, you know, the guy that like had a bunch stored on like a hard drive and spent like millions of dollars like going through the dump to try and like find it and like never did. And this is it's pretty interesting too, because you say 21 million, but I think the number is actually probably less than that, based on like people losing the key or the code essentially to be able to access it. And when that happens, I mean, it's not like you can just create that out of nowhere or like hack the system to be able to do so. So tell me a little bit about that, and then tell me a little bit about the security of Bitcoin as well, because I think digital currencies in that way, when you're like, oh, there's only 21 million, and you're like, let's say you put all of your money in Bitcoin, and then you're like, what if this hacker comes in and then they take all of this from me? People could potentially be worried about that, especially if they're investing real money into it, which we can get down the rabbit hole too of like what you have started to kind of do with strategy based on what you know about Bitcoin as well.
Yeah, all of those are the right things to be thinking about. Anybody who's going to invest in anything should be thinking about risks, security, and what could go wrong. So all of that is natural and important. But Bitcoin, one attribute about Bitcoin security is the project is what's called open source. And in software, that really just means there's no secrets. So every single line of Bitcoin's code is completely transparent. Anybody in the world can go right now online and download it and look at it themselves. And if you understand software or security, then there's no secrets. We can be certain because of that there's no backdoor lurking in it that was like planted by whoever created it or by some bad actor. And you can almost think of it like there is this constant bounty on it 24/7, 365. Some of the smartest minds on planet Earth are trying to break this thing all of the time. And they have been for the last 16 years that it's been alive. And it, has so far just had a stellar track record in terms of security. That's also something that sets it apart from a lot of the other cryptocurrencies. When you are the market leader, the way that Bitcoin is, it's got more money in Bitcoin's network and the market cap than any of the other cryptocurrencies, and it has since its inception. You have a bigger target on your back, right? You're more visible. So there are some of these other projects that have never been hacked, but it's because nobody really uses them, and there's not that much attention on them.
Everybody wanted to beat New England with Tom Brady, dude. Come on. Yeah, everybody wanted to beat him, man. Yeah, for sure.
Well said. Yep. And so yes, there are software risks. Like, it is possible that there could be a bug in Bitcoin's code base at some point, and that could potentially be a big deal depending on the type of bug. But there are all of these people who already hold this asset. There are enormous institutions that already hold the asset. And so in the same way that you might have people who want it to fail and they're looking for ways to exploit it, you have incredibly smart people who want it to succeed. And maybe they already have some of their own personal wealth in it and they want it to remain secure. And so the incentive for them is to keep it as bulletproof as possible. And just for context too, the rigor that goes into Bitcoin security is virtually unmatched in software projects. Like, there have been software developers from, really smart software devs from places like Google that have come to Bitcoin and kind of had that mentality of all right, let's make this thing fancy and upgrade it and change it and move fast, break things is how we build software. And those people don't last long in this community because there is a culture of we cannot break the money and security is paramount. And to even make a slight improvement to Bitcoin's code requires an incredible amount of consensus and review. And so it just has this security first culture that is such a strength relative to all the other projects out there.
Yeah, it's interesting that you say that too, because I'm now thinking if they don't have a board, people working at Bitcoin, this is not something I don't think I've heard you talk with Jeremy about as well. They have to have an enormous staff. I have to imagine somebody has to be keeping the thing afloat and moving it along, and people have to be working on that to make improvements. Six Sigma people, if they're not improving at some point, they're probably just falling behind, right? So how does that look now if you don't have a board and people that are kind of running the ship in the right direction? What does that look like from your understanding of what they're doing over there?
It hits on a really important subject because it's very messy, but again, that messiness is a feature. So there is no Bitcoin company, actually. There's no corporation over the top of it. It's kind of, you could think of it like the internet. There are companies out there that are enormous that are doing things on the internet. Like Cisco makes, network gear and routers and a lot of the communications tech. And then Google, has a big presence on like websites, and Facebook and Meta. So there are all these companies that are involved in the internet. but there is no sort of like internet corporation. It's just an open standard with a lot of smart people and in some cases companies that contribute to it. But nobody really owns it. Nobody can force changes on it. No one can make anyone else go along with what they have to say. And that's a similar model to Bitcoin. So you do have developers who are reading the code all the time. They're thinking about how to keep it secure. Maybe they have ideas about ways to make it better, but there's no way for them to force their changes on anyone else. And so in order for the network to change, it has to really be this slow, gradual, methodical process of, getting buy-in, and something's like so clearly a good idea to everyone, every company involved, that the system kind of chooses to upgrade. All the participants in the system choose to upgrade. And if someone came along today and said, hey, I think it'd be a good idea if we change the supply, and instead of 21 million Bitcoin, maybe it should be 100 million or something like that, and change one of the core rules about it, then it's a non-starter. Like those core kind of, they're called consensus rules in Bitcoin, but those really core rules, such as the supply limit, are not really subject to change. The only things that can change are, little, like, make the processing more efficient over here and do this little operation a little bit faster to kind of keep up with the times. But if anyone tried to change those core rules, such as the supply limit, then what really happens is they end up creating a new cryptocurrency. That's really where these other coins like Litecoin came from, is someone took Bitcoin's code and said, I want to change this important rule and that important rule. And so then they start running it and they make their changes. And maybe other people follow it because they think that's neat, but it ends up being a new cryptocurrency. And there's no way to force those changes on everybody who's just using Bitcoin.
Right. Yeah. It's super interesting. You kind of talked a little bit during that about like buy-in. And I feel like buy-in is so critical when you move from, one currency to another. I mean, you look at like human history and like, rocks and fur pelts and those types of things. And then like gold and silver, and then the US dollar and, the euro. And now we're moving into this kind of digital age of like buy-in. And I think I read, and maybe within the last couple of years, you can correct me if I'm wrong, because I'm sure that El Salvador actually adopted Bitcoin as like, is it national currency that it has become there too? So like, we're talking about like buy-in for something that I think when a country adopted it, like that'd be like adopting the US dollar, adopting a euro. I mean, I feel like that's a huge deal in creating that kind of buy-in and consensus when it comes to that. And you talked about like big players, whether that's like BlackRock or whatever these other big corporations are. Like, talk to me about how like we've gotten to this space where like people are like, oh yeah, dude, this is here. It's here to stay, because there's people that are sitting there like, oh man, this thing went from $200 to now, what is it like today, 80 grand or whatever the thing becomes roughly now. So you're buying like fractions of a denomination at this point, which honestly we do with stocks and everything else regardless too, right? Like it's not super different from that, except we just know the cap. But tell me a little bit about like buy-in and how that has kind of shaped and moved from the time that you started kind of getting interested in 2013.
Yeah, so Bitcoin was created in 2009, and the first users were just these technical engineer hacker types, and they were hobbyists. And so it was kind of this neat little toy project that people would tinker with. And Bitcoin were just thrown around willy-nilly. Like there wasn't even a market price for them. So people would just transfer what is now today a staggering amount of Bitcoin just kind of back and forth to one another because the cost was less than a nickel for a Bitcoin. And then over time grew, more individuals became interested. Eventually some companies started building technology on it. And now, like fast forward 16 years, and it's incredible how it's progressed. We've really got early adopters of every shape and size in society who have started to hold this thing and invest in this thing. So you've got corporations that hold it. Over 100 corporations that are publicly traded around the world hold Bitcoin on their corporate balance sheet already. In the US alone, you've got tens of thousands of private businesses that are starting to buy it and hold it to protect against inflation and to
Which
grow.
we'll hit on that. We'll hit on that for sure. 'Cause I'm interested
For
to hear
sure, yes.
how you guys are doing that.
And then even pensions, sovereign wealth funds over in the Middle East have accumulated hundreds of millions of dollars worth of Bitcoin. SpaceX actually filed their paperwork, or their filing was made public a few days ago, and they unveiled that they hold $1.4 billion worth of Bitcoin on their balance sheet. And then El Salvador has been really leading the charge in nation state adoption. So back in 2021, they made Bitcoin legal tender. You could go down to El Salvador, walk into a McDonald's or even like a little tienda, shop on the corner and pay in Bitcoin for goods and services, which is incredible. And they accumulate Bitcoin in El Salvador as a national reserve asset, the same way that the US and other countries have used to accumulate a lot of gold over history. And so if this plays out the way that I believe it will, where more nations begin doing that intentionally, then El Salvador and those early adopters just stand to rise in the global rankings because they were early to identify that this is important, it's here to stay, and others are going to follow.
Yeah, which is wild, right? It's wild to think about like this country, which, to be fair, like, are they a world superpower in El Salvador? Probably not, but they've got some people that are clearly trying to think ahead, according to you, to be able to make that happen, which is super unique. So we kind of hit on, I'm writing questions down over here because I keep thinking of them all the time. So I want to make sure that we get back to them. If I'm somebody who knows nothing about Bitcoin and I'm like, dude, we talk about like mining Bitcoin, and I'm thinking like people like mining, precious metals from the earth crust and doing those types of things. Like if I were to say today, like, oh, like I don't want to go buy a Bitcoin for 80 grand. I want to mine a Bitcoin. What does that look like for somebody who, it flies Coast Guard planes and also teaches people how to eat better, to look better naked, because honestly, like that's, people have the question and I'm like, oh yeah, dude, like I have no idea. So
yeah, Bitcoin mining. So mining is the way that Bitcoin are kind of brought into circulation. So as I mentioned earlier, like we know with perfect certainty how many Bitcoin are ever going to exist, but not all of those 21 million are in circulation yet. There's this schedule that happens according to. And the design is that in the early days, it's really easy to mine, and you'll find like new Bitcoin are kind of mined, brought into circulation very, very quickly. And then over time, that tapers off, and it takes a really long time to mine the last, million or two Bitcoin. So the very last sliver of Bitcoin is not going to be mined for another 100 years from now. The year 2140 is when all of the Bitcoin will be finally kind of in circulation. But I think that process of mining, it's tempting to think, oh, well, should I go and try to do this mining thing rather than just buy Bitcoin because maybe I could get it at a better price or it'd be kind of a bargain. I would say, maybe if you have somehow access to very cheap or free electricity, then maybe consider it. But there are so many people around the world now who are mining Bitcoin professionally all the time. There are big corporations that just do nothing but mine Bitcoin all day. There's just a lot to that. It's a lot of work involved. You have to like find space for these really hot, really loud computers that use a ton of electricity. You have to hope that your electricity rates are, good enough that it's still going to be economical. And then there's all kinds of stuff that can go wrong. You could, like the machines that you buy to mine Bitcoin, because you need special types of computers, those could break, they could need maintenance. And so sometimes when you run the numbers, even if it looks attractive up front, I've just had many people in my life say, I wish I would have just like kept it simple and just bought Bitcoin, like traded my dollars to someone for Bitcoin and not gone with all that extra overhead of like trying to mine them. Mining's important, and there's always going to be an incentive for people to do that. It's it's useful for Bitcoin, and the network needs that. But for the average person who's brand new to this, unless you really want to just learn how mining works and learn about that piece of it, if you're just wanting to invest, I would gently nudge people towards just buy Bitcoin first and keep it simple, and then go down the mining rabbit hole if there's a compelling reason later.
Yeah, and I'm curious, like if I were to start mining from my laptop here on the thing, am I like going to dive in the deep dark web to like do that, to be like, oh yeah, dude, I've got to like, I'm using AI to bust these, code, this like length of code to do X, Y, or Z. Like, what does it actually look like? And then I'll kind of get into some questions about, investment vessels and stuff like that, because I think that's important to kind of hit on and kind of just dipping your toe and getting kind of in the game,
Yeah. One clever part about Bitcoin's design is that it gets harder to mine the more people who try. And that's an important feature because it protects against certain breakthroughs in technology. So like if there were someone who had a breakthrough design in semiconductor, like they made some fancy new chip tomorrow and it's really awesome at mining Bitcoin, then if Bitcoin weren't able to adapt to that, then we could potentially mine all of those Bitcoin faster than we planned to. Like we wouldn't know how long it would take to mine all of the Bitcoin. But what happens is the Bitcoin network sees kind of how many people are trying to mine and how successfully that's happening. And if it's happening too fast, then it becomes harder to mine. And if it's happening too slow, it becomes easier to mine. So like if, a few years ago, China was the biggest country globally that had Bitcoin miners kind of running inside of its borders. And then the Chinese government one day woke up and said, hey, actually Bitcoin mining is illegal. And so all of those miners had to like shut down and, find other places to run. And you could see them kind of drop off the network, and it got easier to mine Bitcoin when that happened. And that's important because that adaptability keeps things predictable. It makes sure that we know how long it's going to be until all these Bitcoin are in circulation. So it's a very elegant part of Bitcoin's kind of incentive structure there. And,
super interesting.
And I'd also say, like, as a footnote to all that, Bitcoin mining is probably the most technical side of all of this whole thing. And for people who are not really deep in the tech, it might feel a little intimidating. And I don't want anyone listening to feel like you have to understand Bitcoin mining in order to buy Bitcoin or to use it or to have it, make your life better. It's almost the same as, if you ask the average person where a dollar comes from, like most people don't know. Is it the Fed who does stuff? Is it the Treasury? Is it the Mint? What order do things happen in, and who does what first? Like it's pretty complex, and very few people understand that. But we're all comfortable holding dollars, using them to save, using them to spend, just because we look around and we see everyone else in the world do it. And so we say, all right, this is probably fine to do. And I think it's going to be the same way over time as Bitcoin becomes more familiar and more comfortable. It's just going to sort of be like, of course, there's only 21 million Bitcoin. And you might not know the first thing about software or mining, but that's just kind of an understood aspect of this thing, in the same way that pilots fly airplanes and people travel on planes, but you don't know the physics of flight. You just trust that because you see it happen so often in our day to day.
Yeah, for sure. I can totally appreciate that. You think about people living in homes. Not everybody can build their own house, but everybody's going to live somewhere. So it's totally something that you can kind of conceptualize. I think because, again, you hit on it early, like because it's a digital thing and you can't feel or touch it, it just makes it that much harder for people to kind of bite off. You're like hitting the nail on the head as well of like, get in the door in some way, and getting in the door doesn't necessarily look like you're BlackRock putting, billions or trillions of dollars into the thing. So tell me a little bit about like the investment vessel, like how would somebody new to this thing like get involved? When I listened to the show that you had with Jeremy a number of I think it was a couple years ago, you had talked about a couple of apps that were super user friendly and easy to use, and that's what I currently do as well. And then I want to hear kind of like Stephen Cole, not that you're gonna give official financial advice to anybody, which I'm sure you probably have to caveat, but like, where do you see this Bitcoin thing going in 1 year, 3 years, 5 years, 10 years? Because people have been watching it, whether they're paying attention or not, make headlines at like, hey, this thing is $200. Oh, and then it's $5,000, and now it's $10,000, now it's $20,000, now it's $6,000, now it's, and the swings for a lot of people and the volatility makes people pretty nervous about it too. So I'm thinking like, hey, as an investment vessel, or in portfolio, how is that something that somebody can like realistically conceptualize, and be like, hey, this is just an avenue for you to kind of help accumulate something? Because at the end of the day, if you're stuffing dollars under the mattress or leaving it in a savings account, I mean, you're getting screwed in all directions. And we can probably go down the rabbit hole for hours talking about that. But
Absolutely. Yeah. Every year that Bitcoin's been around, it gets easier to use and easier to access. So early on, Bitcoin's first year or two, you had to be pretty technical to even like touch this stuff. It was like use a computer, fire up a command line, know a lot about software, high risk that if you do something wrong, like the Bitcoin are going to be gone. And there was no financialization or financial products built on top of it. And now, where we're at today, it's really easy. There are even mainstream US financial institutions that have built ETF products, exchange traded funds. And so you can go to your brokerage today and you can tell them, hey, buy Fidelity's Bitcoin ETF or BlackRock's Bitcoin ETF. And that at least gives you exposure to Bitcoin's price in your portfolio. You don't really have to do anything technical. You don't ever have to like take possession of those Bitcoin yourself. It's just kind of like if you bought a gold ETF in your portfolio and you didn't want to mess with holding a physical gold coin or a gold bar at home.
yeah.
So all of those instruments are available now, and that's been an enormous unlock for the industry because now it's accessible to these very large pools of capital that can only touch the asset that way. But one thing that's special and cool about Bitcoin is that if you do want to go deeper than that over time, you can take possession of the underlying asset yourself. So you could withdraw the Bitcoin from the place that you bought them potentially and store them yourself and kind of be your own bank and not need to have any counterparty risk. You don't have to. Like, you could totally trust some company to keep them safe, kind of like you trust a bank to keep your money safe. Or you could, access them via an ETF. But I think the fact that that option exists for people to take possession of them, store them on your own device, on your own computer. There are all kinds of different they're called hardware wallets. They look like USB sticks, and they're special devices that are just designed to keep Bitcoin safe. And so having that option is really powerful because it just allows people to control more of their own destiny if they want to, without any pressure to necessarily. Right. And so there's less room for shenanigans, like you can be sure that what you own is actually yours if you want to.
Which again, if you compare it to a bank, like you can have dollars in your wallet or you can have dollars at the bank. And this is just the digital version of that. Like you could do that. You could invest with somebody else. Yeah, for sure. Totally get it.
Yep. Yeah, absolutely.
So tell me about like what you see now. Like you see this, like it's accessible now to people. What are you using, I guess, or what are some apps or websites that you end up like kind of recommending for people to kind of get involved?
Yeah, I'd say to anyone listening who's like brand new to all of this and you kind of just want to get exposure to Bitcoin's price, buying an ETF is kind of an easy button for that. So, maybe that makes sense to do on day one. But then I would say a good next step is look into some companies that will allow you to buy Bitcoin and they have the option to allow you to withdraw those coins someday. And companies like that, there's one called River, river.com. There's another called Swan, swan.com. You can also buy them on places like Coinbase, which a lot of listeners have probably heard of. What I like a little bit more about companies like River, like they're focused solely on Bitcoin. And Coinbase, if you buy Bitcoin on there, then the next time you log in, there's probably going to be this pop-up that they hit you with that's like, great, you bought Bitcoin. Here are these thousands of other cryptocurrencies that you can now trade that for. And by the way, we make money on you every time that you trade your Bitcoin into one of these other coins. And so it kind of starts to blur into this almost casino gambling type of mentality where they lead you into this world of these thousands of other coins that are kind of sketchy and really easy to get burned and to lose your money. And I see a lot less promise with any of those other coins. So I like, for multiple reasons, companies that just are laser focused on Bitcoin. It's a lot easier for them to be secure when they don't have to worry about thousands of other cryptocurrencies and all the surface area that introduces for problems, for potential exploits, vulnerabilities. So yeah, finding a Bitcoin focused company to buy through that allows you to buy it. You can link up your checking account, give them your dollars. They give you Bitcoin. They'll hold them for you. And if you ever decide that you want to withdraw those coins, take possession of them yourself, then that option's there and it's easy.
Which is super cool. I think I use Swan, which from your recommendation a couple of years back, and it's incredibly easy. You're linking the thing. I've got it set to buy $50 a week. And it's like, yep, I'm going to buy $50 a week. And we're just going to do that and let it ride. And yeah, who knows? Do I look at it every day? No, because I think I'd drive myself nuts. But
good strategy.
At the end of the day, like if you're watching the market over time, which kind of gets me into my next point of like where you see this thing going and where it's at now, like where does that go? Like people are talking about, hey, I don't want to put my money into a bank account because I'm getting a fraction of a percent in a savings account, high yield savings account, somewhere 3 to 4 maybe ish percent, which is a little bit better. And you got the accessibility there too. Obviously better than a savings or like a checking account that you kind of have stuff sitting in. But now this is another vessel to where like, hey, people talk about your retirement stuff and risk profiles and like, hey, do we want to take big swings and be a little bit more aggressive with ours because it's longer tail money versus shorter tail money? So tell me a little bit about like where you see the Bitcoin kind of game going in the next, 1 to 10 years, and then how that kind of looks for somebody as an investor who's like, yeah, I kind of want to try and get ahead. And I don't necessarily know how to do that by, stuffing dollars under the mattress or sending them to, whatever insert bank that you want to use, Citibank or whatever you guys are using.
Yeah. I think there's an incredible amount of upside potential on Bitcoin. And one problem with it, I think, when people dive into all this is figuring out, is this thing expensive? Is it cheap? Like it used to be $200 for a Bitcoin in 2013 and 14. Now it's $80,000 for a Bitcoin. Like, where is this going to go? And how should they even orient themselves? What is the potential on this?
And do you have to buy a full one, like an entire one
right.
Bitcoin to even get in the game, which I think is something that a lot of people are curious about too.
Yeah. And that's probably a good one to just crush up front is no, you do not have to buy a full Bitcoin. Don't let that be a barrier to entry for you if you're thinking about this. Don't feel like, oh man, I need 80 grand to even like dip my toe in the water with this asset, because that is definitely not the case. You can buy a fraction of a Bitcoin. You could put $5 in. A great strategy is dollar cost averaging like you do. So just carve out whatever dollar amount works for you and buy that every week or every day. And then you don't really have to stress about the price swings in the short term. You just kind of know that you're averaging in. And you could even say you're kind of gradually upgrading to this better form of money by doing that. And in terms of whether it's expensive, when I got into it in 2013, I remember it was like $180 for a Bitcoin. And I thought that was very expensive, because naturally what we do as humans is we look at the price of the chart like a few years leading up to that, and you think, oh, well, it used to be way less than this. And so at the time I was like, wow, well, it used to be $5 and it used to be $3 and now it's 180. So that feels insane. Like, did I miss the boat? Is this too late? And clearly it was not. And I think now today it's the same. You look at the chart and you see it's 80,000, and a few years ago it was 40, and then before that it was a lot less. And so how high is this going to go, and what even is a realistic potential there? And in order to figure that out, I think it's useful to think about it in terms of the market capitalization. So the total amount of value that's been invested into the coin, and like the amount of wealth that the network is securing. And today, Bitcoin's still a little less than a $2 trillion asset. And 2 trillion sounds like a big number, by itself. But when you stack that up next to other assets that Bitcoin competes with, and that I would argue Bitcoin is far superior to, it's small. It's a drop in the bucket. And I think we're still really early. So as some examples, gold is about a $20 trillion asset class.
10x,
so 10 times the amount of value that's stored in gold today compared to Bitcoin. Then you get into like the global bond market is at least 150 trillion up to 300 trillion, kind of depending on the stats that you believe. And then real estate is a $300 trillion asset class. So there is just a staggering amount of capital sloshing around out there in the world that is not yet in Bitcoin. And there are still single companies, even in the US, that are much larger than all of Bitcoin. Apple or Nvidia, each of those alone is bigger than Bitcoin. They're like $4 trillion companies.
Yeah.
And I think that's going to look funny to look back on. I think Bitcoin's potential as the world's global money and this new monetary base is so much larger that we will look back and it will feel quaint to say, oh man, remember when it was just a $2 trillion asset? Like, that was cute. And, it seemed expensive at the time. And how funny is that? But, even if it's never the global way to do all payments, which I believe it could be, but let's say it's not. Let's just say it's a better gold. That's still a 10x from where we're at right now. Just by being a better kind of hedge against inflation, store of value. And
which kind of brings me to asking you about that a little bit too. So I heard a bit about Castle on the podcast that you did with Jeremy. So tell the people kind of a little bit about Castle. You obviously believe a lot in Bitcoin, being a CEO, co-founder of this now company that I actually had the website up the other day when I was listening to it. I was like, man, this is incredibly interesting. So tell the people a little bit, like, what is Castle? Who are you guys helping, and what is it that you guys are looking to do? Because I saw an 11.5% high yield savings account thing, and I was like, this is insane, dude. This is, essentially like 3 to 4x of what I've ever seen exist in the commercial market, which I think people would be, obviously skeptical of a bit, but also
Sure.
if you kind of explain like what's going down, I think there may be some truth and value to it based on the averages and the growth of the coin over time.
Definitely. So at Castle, we're focused on bringing Bitcoin to businesses, and we believe Bitcoin is the world's future money. And it's important to me and to us at Castle that Main Street USA and all kinds of businesses in our country get to participate in that and benefit from that. And so everybody listening probably either has some Bitcoin personally, or someone in your life who has. Individuals have been buying Bitcoin for 10 plus years now. But what's starting to happen now is businesses are also beginning to buy Bitcoin and to use it to protect their balance sheet. And we're in the relatively early days of that. So there are some Wall Street behemoths and really large corporations that have billions of dollars worth of Bitcoin, and they have all the resources to kind of figure that out and manage that. And then there are retail individuals and traders that have had these platforms for a long time. And what we thought at Castle is there are 35 million SMBs in the US, small and medium businesses. And Bitcoin can do an incredible amount of good for them. It can help them grow more effectively, grow their balance sheet, fuel their expansion. So let's just focus on bringing something to them. Let's build a platform specifically for business owners to provide them with a financial stack that is either oriented around adding Bitcoin to their balance sheet, or it offers them types of returns that are fundamentally enabled under the hood by some of Bitcoin's properties. So a business can sign up on Castle and you can kind of do three different things at a high level. You can buy Bitcoin and we make that seamless and automatic. So you can kind of, you can choose to put a percentage of your revenues into Bitcoin. If you said, hey, I want to make this part of my strategy and I want to put 1% of my gym's revenues into Bitcoin, then you can do that on Castle. You can kind of set it and forget it. The other things that we've recently added to the platform are a way to just park your cash. So you can wire or ACH dollars into Castle and we give you a cash account to hold those dollars, but then you earn 3.5% interest, up to 3.5% interest. And that's paid to you monthly. And that interest goes into Bitcoin for you. And you can operate the company out of that account. So it's kind of a cash account that you can operate from, but it earns those monthly rewards, you could say, in Bitcoin. And then the third product on our platform is the one you touched on initially that's getting a lot of buzz in the ecosystem. So in addition to the cash account and the Bitcoin buys, we offer a high yield account. And that offers currently 11.5% dividend. And that 11.5% is also paid in a tax deferred manner. So it's a little more tax friendly than just typical interest income from a savings account.
And explain to people what tax deferred is, because anybody listening may be like, oh, dude, I don't know what that means. That's big word, man.
Yeah. The term to look up there. So the way that product works is it's making use of this categorization from the IRS of return of invested capital. So if anybody listening wants to go down this rabbit hole, you can Google the concept of return of capital. There's like a good Investopedia article on it, but essentially what's happening is you put your money into this product and then you receive these dividends every month. And every time that you receive a dividend, you're not paying taxes on that in the moment. What's happening is it's lowering the cost basis on your original investment. And so eventually, if you hold this long enough and you get these dividends, and at current rates, this would take like a little over 8 years, then eventually those dividends start to be taxable when you receive them, but it would be long-term capital gains tax. Rather than standard interest income. And if you were to withdraw the principal that you put in, so let's say someday you want to take your money out of this high yield product, then your cost basis is a little bit lower, so you might pay a little bit in capital gains taxes at the time that you do that. But in general, it tends to be, and of course this is not financial advice or tax advice, it tends to be a more tax-friendly profile of operation there than just standard interest income. The way that product works, because I know everybody who's familiar with like traditional banking products and rates is probably going 11.5, what in the world, how are you doing this? Under the hood, we're making use of a product called STRC. And that is a product from a company called Strategy. They're the largest holder of Bitcoin on planet Earth. So they have accumulated over $60 billion worth of Bitcoin. And they have released these products to kind of offer investors a way to get fixed income types of returns. And Strategy then holds the Bitcoin on their balance sheet, and they're really taking the long-term volatility risk on holding the Bitcoin, and they are paying investors in these products per month these rates. And so you give your money, you invest into this high yield account, and that company strategy is taking that money and buying more Bitcoin for their balance sheet. And at current rates, they have enough capital on their balance sheet to pay this dividend for, decades, even if Bitcoin never rises another dollar in price.
Yeah, and talk about how they found 11 and a half, or how you guys settled on that number too, because I think it's important to kind of talk about like historical data with the coin too.
Yeah, that rate, it is variable, so it could change in the future. And that rate is set by that company strategy. A fun stat about that is, so the last 5 years have been the worst performing 5 years in Bitcoin's history. And the average return of Bitcoin, if you kind of average it out over that 5-year period, it's been about 38% per year growth in Bitcoin price. And so because strategy has accumulated such an incredible amount of Bitcoin on their balance sheet, it's enabled them to think very long term with this. They can absorb some of that volatility risk, and on their side, they are believing that on multi-year timeframes, Bitcoin's value is going to continue to appreciate because no one can ever print more Bitcoin, and we constantly print more dollars. And so in dollar terms, their balance sheet's going to go up. Yeah. And as more people invest into this product, they're constantly accumulating more Bitcoin. And so they themselves are driving Bitcoin's value up, at the rate of a couple $2 billion a week recently by having this kind of creating this connection between the fixed income markets and Bitcoin. So what we're doing at Castle is we looked at this product and we said, this is an incredible financial building block. And we believe that, like, as shocking as the rate of return on this product is, we believe that this is a very important financial innovation. It's only made possible because of Bitcoin's properties. If you tried to do this type of product with any other asset underneath, you would not be able to offer those types of returns with confidence into the future. But because of Bitcoin's supply side guarantees, strategy is effectively offering that as almost a carry trade, you could say. And so we looked at that and we did a deep dive on it and said, this product could do a lot of good for a lot of businesses. So we incorporated that into our platform, offering access to it through our high yield product. And, where at the same time, it is a very different risk profile than like a standard savings account. So if a business came to us and said, we want to put all of the money that we've ever earned into your high yield product, we would encourage them to diversify. We would say, maybe the high yield product you should think about with, a relatively small percentage of your overall balance sheet. And then, have some Bitcoin that you just simply hold on your balance sheet in addition to that, and make use of the cash account where you have just dollar liquidity. And then through those three products, you can really find the sweet spot in terms of your overall risk profile.
Yeah, which is really cool, man. It's I've never heard of anything like that. I don't know if it exists yet. Maybe you guys are pioneering the way for future financial institution style of thought, but it's incredibly interesting. And it's also interesting to hear you talk about, hey, in a year, in 3 years and 5 years, like, $2 trillion becomes a drop in the bucket of what this thing is really capable of. So what is it? Today is what, the 21st of May, 2026. Stephen Cole says that by the 21st of May, 2027, Bitcoin is going to be worth X. What is that in a year? What is it in 5? And what do you think it is in 10?
By May of I think sometime 2027, we could be at $500,000 for one Bitcoin.
That's crazy.
It seems shocking to think about. But if Bitcoin were not more than $1 million in the next 5 years for one Bitcoin, that would be surprising to me, just based on its fundamental strengths relative to all of these other things. It is so much better than gold. It is so much better than real estate. It is so much better than bonds. It is the best savings technology that humanity has ever had access to. And so all of that capital out there in the world that's using these other assets, not really for their utility value, but just as a way to save. In the US, as an example, homes have almost become the new savings account, which is kind of sad. But it's like the goal, like get a home, and then the appreciation on that, it kind of ends up being a big part of your nest egg. And I think a lot of that you can trace back to the money being broken over time, because the US dollar has been more and more broken at various points over the last 100 some years. It's forced people who want to save and protect their value to start investing. It's made everything more complicated for them. Suddenly, you can't just work hard and build a great business and get paid and hold the money, and the money's good and it protects your value. Suddenly, everybody has to have a 60-40 portfolio and stocks and bonds and retirement accounts and then a mortgage, like 30-year fixed, and
You
all
gotta
of
get
that.
on board, dude. You gotta get on board.
And if you don't do all of those things, you are perceived to be falling behind. And we've just kind of normalized it, so nobody really thinks about it. But that's not normal in the grand scheme of things. It didn't used to be like that. And the fact that it is like that introduces a lot of unnecessary overhead into society. And it squeezes people who suddenly everyone has to be a finance expert, or they have to pay someone to be their finance expert on their behalf. And if people could simply have access to strong money like Bitcoin, and then they could just work hard, be amazing at their craft, get paid, hold the money, and the money is good. And certainly you can still choose to invest if you want to, but you don't get pushed into it. You don't kind of have to do it because the money's busted.
Yeah. I love it, man. So tell me, I think when I listened to the episode that you had with Jay a couple of years ago, you had said like almost all of your personal finances were kind of tied up in Bitcoin. Like, how does that look now? And then I'll get you out of here, because I know I promised an hour and we're already a little bit above that. But I'm just curious as to how it goes with you now.
I could happily jam for a long time on this stuff. At one point in time, my entire net worth was in Bitcoin. I cashed out all my 401ks, took the penalties, put everything into it. And part of that was practical. Like, I did think this is incredibly promising and it's got a lot of upside, and I want to, I'm comfortable betting on that. And if I'm wrong about it, then it's on me. But it was also philosophical. I saw Bitcoin, and I still today see it as the best hope of doing so much good for humanity. I think that central banking and the ability to have a small group of people manipulate the money supply, print money, that's effectively theft. That's stealing value from people who are trying to save. The dollars that you hold in your account buy less stuff over time.
Yeah.
And we don't think about it that way.
A huge thing to be like cognizant of, right? Like your dollars today are worth less tomorrow.
Yeah. It really is. And I see Bitcoin as the hope to change that, the hope to allow humanity to flourish, because people have access to sound money. And so it's a way to protect their value. And so it was something that I also realized I would feel philosophically good about. If something didn't work out, there was something that I didn't anticipate and I ended up losing money on Bitcoin, I would think, well, I would still feel good, because I felt like I was almost like fighting in a way. It's like I viewed it as the most powerful vote that I could cast. And I don't think that this monetary system and central banks, I don't think it's the kind of thing that ever gets solved at the polling place. I don't think they're ever going to allow people to vote on it. I think the real vote for what kind of future you want, whether you want a future of the money being controlled by a small group of people, or you want a future where the power is kind of restored to everyone, bring power back to the people. The vote for that is what you hold. And if you hold Bitcoin, then you're voting in a way for that more kind of free power back to the people future.
Yeah, super interesting. Super interesting way to see it. And I think you gave the analogy too before, where it's like you're somebody on a treadmill and they're just slowly dialing that thing up. Tell people about that. I know I keep saying one more thing, but I feel like that's a
Yeah,
great way to think about the money and kind of understand like what today's looks like, and then future 5-10 years from now, and like and what your amount of effort is for the same kind of return that you're getting in purchase cost. Because people always talk about like, oh, when I used to be able to get a soda, it was 5 cents or a nickel, and now like what can you actually buy with 5 cents, dude? That I mean, they stopped printing or making pennies, right? And like it's not even
no,
like a denomination of money that exists anymore because we're going down that way. So give that
totally.
analogy quick, and then I'll get you out of here.
And there's no end to it either. It's like, at some point the quarter goes away and then the dollar bill goes away and then the five,
Yeah,
you like there is no slowing down. And so that analogy I love, it is like everyone in society is running on a treadmill, trying to work hard, trying to create value and get by and increase their wealth. But when you're in this inflationary system, it's almost like the numbers on the treadmill are staying the same. It tells you you're like running at the same speed, but you can just feel that like somebody is cranking up the speed. Like you're having to run faster and you can't really explain why. And I think that is kind of the squeeze that so many people in society can feel day to day, with everything slipping out of reach, everything getting more expensive, and they're working hard and they're doing all the right things, so to speak. But it's just kind of drifting to that sad place. And Bitcoin offers a hopeful alternative to that, I believe, where a great exercise too, and is if you hold Bitcoin and you consider Bitcoin your money, everything gets cheaper. Take a chart over the last 10 years or 5 years of whatever asset you think, whether it's a stock or if you're like a commercial real estate investor, if you're a restaurant owner or a gym owner, just like chart the stuff that you pay for, your costs, your eggs for your restaurant, the lease that you pay for your gym. Graph those over the last few years, and you can see like they're clearly getting more expensive every year. Everybody knows that. But then if you change the denominator on that chart from dollars to Bitcoin, all of those things get cheaper. Your eggs get cheaper every year in Bitcoin. Your lease payment gets cheaper. A house gets cheaper. It used to be hundreds of Bitcoin to buy a house, and now it's a handful of Bitcoin to buy a house. And I believe someday it's going to be a small, very small fraction of a Bitcoin to buy a house. And so if you make Bitcoin your money, then you start to experience this deflationary reality. Your money buys you more over time.
yeah, crazy, man. What a cool thing. I feel like I could talk to you for hours about this, dude. Tell me, or tell the people. I'll end up putting it in the show notes anyway as well. But tell people where they can find you, connect with you, where the Castle website is. Give everybody the information real quick as a plug, and then I'll make sure to put it in the show notes too.
Yeah, I appreciate it. I'm on pretty active on Twitter or X. My personal handle is STHENC. And then we are savewithcastle.com, and we are Save with Castle on pretty much every form of social media. My DMs are open on X, so if there are any business owners out there or just individuals who are hearing this and they're curious about what all this means and how they can get going, I love that stuff. So hit me up.
Dude, I love it, man. Thanks again for your time. I really appreciate it. I know it's kind of weird seeing a dude talk about health, but I'll say at the end of the day, your personal health also comes from financial health as well. And it just kind of buys you a lot more capability to be able to kind of continue to pour into stuff that you love. So again, appreciate you coming on, brother. Excited to continue to pick your brain about all things Bitcoin in the future too. And we'd love to have you back on at some point.
Absolutely, man. Thanks for the opportunity, Blaise.
Yeah, for sure, dude. All right, you guys, remember, you don't stop playing because you get old. You get old because you stop playing. We'll see you next time. Peace.